good afternoon. You're watching Buy Now Sell Now on ET Now. I'm Vinny Motiwala, with me Shel D'Souza as well. Shel, a very good afternoon to you and good morning. Sorry, yes, morning. But markets today managing to hold on to the green. We did see a bit of a blip coming in right now and a sharper fall, but again coming back and recovering from the day's lowest point.
Absolutely, and a good recovery coming in from the day's lowest point. And everyone was hoping this sort of a recovery we would be able to see in yesterday's trading session, but that's not how it transpired. Very good morning to you, Winnie, though. But yes, it looks like a brighter morning today compared to what we actually witnessed yesterday. It was a pretty dark Monday coming in for the markets across the globe. We also had a weak handover coming in from the US markets, but then you had the futures that turned tide overnight. You had the Asian market seeing a sharp up move, with the Nikkei actually seeing uptick of as much as 12%. They had a circuit breaker that as well that was activated, but that was for the upper circuit, unlike what it was yesterday. All eyes on that three-way meet that will be kick-starting in Japan. That is at 11:30 a.m. You will have the Ministry of Finance, you will have the Bank of Japan as well as the financial regulator as well. All three of them would be meeting. The meeting is slated to start at 11:30 a.m. and they will be addressing the press post that. So let's wait out for the commentary for that. But right now, Nikkei is still holding on to good gains, about 8.5% or so. You have Kospi also holding on to good gains, and the Indian market is also now trying to be supportive. Not gaining as much, but nevertheless, we did not fall as much as they did yesterday. But today, holding on to good gains, about 8-10% for the benchmark indices, recovering from the day's lowest point. Ditto coming in for Nifty Bank, which is now seeing some sort of a shade of green, because that one actually saw a sharp dip from the day's highest point as of now. Talking about the advanced decline ratio, pretty pleasing, because you have it very significantly tilted in the favor of the gainers, with the list of losers just being cut to 6 stocks on the Nifty that are on the losing end, while on the gaining end you have Adani Enterprises, HCL Tech Mahindra, Grasim, as well as JSW Steel. Let's break it down further to see what the sectoral indices are doing at this point in time. All of them in the positive territory, with IT Realty leading the pack. So that's the way how the markets are looking like at this point in time. Vinny, definitely fingers crossed that this sort of a move should continue through the rest of the day.
Absolutely, fingers crossed for that. But on that note, let's get started with all your stock related queries. And today we do have Dhwani Patel as well as Rajesh Agarwal as our experts. Thank you so much, and good morning, Dhwani as well as Rajesh, for joining in with us on the show. While viewers, obviously, you can start sending us all your stock related queries that will on the number that is flashing on the top of your screen. So do send us your queries. And the first query, Rajesh, I'm going to start with you. We have this one coming in from Mohit from Ludhiana. He's got 300 shares of Campus Activewear at a price of 284 rupees per share. Time horizon is almost 2 years. What's the view?
Good morning, Vinny. Good morning, Sharil. Good morning, Dhoni. Campus Activewear. I think the company, although being good, the valuations are on the higher side, despite the fact that it has corrected quite a lot from its all-time highs. But still, the earnings numbers and all don't justify the kind of valuations it's getting at this point of time. Maybe just because of market excitement move up to around 340, 350 odd levels, but that's a risky bet. What I would suggest is book partial profit at this point of time. And if it moves up another 7-8% from here, book full.
All right, let's take the next query then. A very good morning to you, Rajesh, as well as Dhwani. I'm sure both of you all had a very hectic day yesterday. Hopefully today looks a little better and somber. But let's take the query coming in from Veni, who is a senior citizen writing to us from Hyderabad, and wants to invest about 5 lakhs in defense stocks like HL, BL and BHEL. Out of these three, which one do you think, Dhwani, are the best stocks, best 2 stocks that Veni can invest right now, and good entry price? The time frame is 1 year. BL today saw a double downgrade coming in from BofA because of the industrial space, and they have actually downgraded the entire space. But apart from that, what's your take coming in on all of these 3 counters on the charts?
I'm talking about the defense sector overall, looking at a 1-year horizon. Definitely, you can put money into it, but I would not suggest putting everything in one go right now, given that we are facing, certain geopolitical tensions over here, and the overall market scenario right now is quite volatile. So I would suggest investing part and part into the whole sector slow and steadily. For now, I see HAL at a good buy point over here, because it's tested its previous support levels around 4,400 levels, and from there we are seeing a bounce, which was there in yesterday's session. Also, we didn't see that kind of a cut, and in today's session also we are holding here in green. So for now, only one pick I would suggest, which would be in HAL. From current levels, she can put a stop loss on the lower side over here at 4,300 and hold on the higher side. 5,500 should be expected in near term, but overall the entire sector is definitely lucrative, but part investment is recommended over here, starting from HAL.
Let's move on, and the next query is on IRERA. Rajesh, obviously this one has seen a very sharp run up in the last 1 year, but last 1 month seems like it took a bit of a breather. Now we have Baldev Raj Jain from Jalandhar who wants to know, is it a good time to enter the stock, or maybe wait for a bit before entering for the long term?
Because when you compare this company to its peers like PFC and REC, they are trading at a huge discount, or rather I would say IREDA is trading at a huge premium to them, despite the fact that they are almost in the same line of business. Yes, it's a fact that IREDA is more into renewable energy, but then also it's a financing company and trading at a huge premium to the both of them. It's better to wait for some more correction to come in. And if you want to invest in the power sector, there are numerous opportunities like CESC or Tata Power, which are on a better footing than IREDA.
All right, this next one is coming in from Balan, wants to know about BSL Limited. Our viewer has BSL making 20% profit, actually, over 20% profit, Dhwani, in this particular counter. He wants to know whether it makes sense to exit that and look to buy Vellore Estates, which is DB Realty now, and Schneider Electric for a period of about 6 to 12 months.
Talking over here first about the investment that he already has in BLS, definitely the counter has given a good up move over here. But in my suggestion, I would not recommend to switch over at this point in time, because the stock has already seen a momentum in today's trade, and we are trading with good volumes over here. In fact, if you compare to the past volumes, we are seeing 5x of volume increment over here in BLS. So continue to hold on to your trade. Once you see an up move over here, where I expect that the prices in this particular counter can go up to about 350 levels, given a period of holding about 6 months over here, it should be a good investment for you. For now, I would suggest to hold on and not switch over.
It's my mistake. I think the viewer is saying BSL Limited. That stock is actually worth about 245 rupees per share that I can check right now. So I believe that's the stock that he has in his portfolio, actually, Dhwani, with the 20% plus profit. I don't know if you track BSL Limited, but otherwise, what's your take on Vellore Estates and as well as Schneider Electric? I'm very sorry for that.
Yeah, what I gave the view was on BSL Limited. It's currently trading at 245. In today's session, we are seeing about 14% of a gain over here. And in my suggestion, I would suggest to hold on to this one rather than switching over. Talking about the other stocks that he has focused on, Schneider specifically is something that I have my eye on, but the stock has yet not given a big breakout over here. 835 is the level where the stock is expected to give a breakout for the momentum trade on the higher side. So I would suggest hold on to BSL right now. Once you see a breakout coming in over here, you can switch over, because there is still momentum left in BSL as well.
Rajesh, this next query, it's a continuation, maybe you could say, because you did mention PFC and REC when we were talking about IREDA. But Satya wants to know that can they purchase PFC, REC or SJVN at the current levels for the long term?
Yes, any one of them out of PFC or REC can be bought at this point of time. Although the valuation are higher than what the averages, long-term averages, average valuation of these companies are, but still going forward, I think these companies can do better than what IREDA can do. So one can, even they give valuation comfort, I would say. One can go long on either one of them, either PFC or REC. SGVN is a avoid at this point of time.
Okay, this one is coming in from a viewer, that is B. Tega, wants to know about Yes Bank and Vodafone Idea. Is there any chance that these particular counters will see an uptick? He's making no profits. He's not mentioned his buy price. The fact that he's making no profits, which means that he has actually gone ahead and bought these stocks at the upper end of the price band. What's your take, Dhwani? Any scope of seeing an up move in either of them, and make sense for a viewer to stay put, or look to exit and switch out of it and look at some other stocks instead?
Are some stocks where it's there in everyone's portfolio. Nobody wants to part away with it and keep on holding on to it and still get a view, get a level, and in a hope we are holding on to it. But these are good for short-term trades right now. I don't see any portfolio addition that they will do to your entire holdings over here. Talking about Yes Bank specifically right now, I don't see any uptick coming in on this particular counter, though the stock has definitely shown some strength where the stock moved from 18 levels to about 32 levels, and we saw those exponential gains coming in. But again, it's into a consolidation zone right now, and on the lower side I see that the stock could slip down around 21 to 20 levels. Given that holds out, we could see some momentary gains coming in over here, but overall an addition into the portfolio is something which I do not recommend into Yes Bank. Similarly, talking about Vodafone Idea also over here, the stock, of course, has seen, some momentum trades coming in. But talking about a shorter trend over here, we are seeing a decline into it. The stock will test again its 200 period EMA around 14 levels, from where we could see a certain bounce. So in both the stocks, I would suggest momentary trades are good, but holding on to as a portfolio stock is not recommended.
So that's the take coming in on the counters. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get your answers for all of your stock-related queries. And we've already kick-started taking your queries. We have a guest, Rajesh Agarwal, as well as Dhwani Patel on the show with us. And let's continue taking your queries then. This next one is coming in from Sushila, who's writing to us from Bellary. Wants to know about RCF. Does it make sense to go ahead and buy this one afresh? Actually, let me take this query to you, Rajesh. What's your take coming in on RCF? The fertilizer pact, everyone was expecting some of the other good policy moves come in. Didn't happen in the interim budget. Didn't happen in the actual budget as well. And the stocks have seen some sort of a correction. What's your take?
We have a buy call on RCF. Not only RCF, but some of the better fertilizer names like a Deepak Fertilizer or a Coromandel International. These are good names going forward with the kind of focus government has on agriculture and all those things, and the good monsoon coming in. I think these stocks are going to do well. And not to forget, they have corrected quite a lot from the days high, from the 52-week or all-time highs. So I think one can go long on them. As far as RCF is concerned, the product profile is good. The company has been doing good. The numbers have been improving. They have some learned story with them too. So one can have a target of around 240, 250 odd rupees in the next 1 year and go long in this.
Dhwani, this next query we have is from Krishnan from Mumbai, who wants to know on IRFC. They are holding IRFC at a price of 193 rupees per share. Should they add more at the current levels? What's the view?
Definitely, it makes sense to add. The stock is already into an uptrend, and what we are seeing at current price level, it's a higher high, higher low channel formation that we are seeing, and stock is currently at the bottom of the channel right now. So one can average at this point in time. I am looking at a stop loss over here on the lower side at 172 for the new positions taken, and the target on the higher side is at 230.
Rajesh, coming to you. This one is coming from Pradeep, writing to us from Calicut. Wants to know about IDFC First Bank. 10 shares at a price of around 83.39 rupees per share. Should the viewer hold it for the medium to long term, as well as Amar Raja Batteries? What's your take on this one? Do you think that it makes sense to go ahead and enter the stock afresh, given the fact that it has seen a very fair share of rally already?
See, as far as IDFC First Bank is concerned, I think one can continue to go long. The numbers have been good. It's quite improving. And not to forget, kind of management it has. So I think maybe a target of 80 in the next 1 year is quite possible. Amara Raja, yes, one can go long. The numbers have been good. The company is doing well. It's one of the largest battery makers in the country with a lot of OEM customers. And with the kind of numbers we are witnessing in the auto pack as such month-on-month number, I think these OEM players are going to do well. Amraja is a buy from our side.
Dhwani, Satya wants to know on HCC or Suzlon, which is a better bet right now at the current levels to enter for the next 1 year or 2 year time period, 1-2 years?
Absolutely. Talking about both the counters, HCC is what we're talking about first over here.
HCC as well as Suzlon.
Okay. Talking about both the counters, I prefer HCC over Suzlon over here, given the weekly charts of HCC are much promising over here. We have already seen a weekly breakout coming in into the counter around 44 levels, and we are sustaining the same levels over here. So I would prefer HCC to buy at any given day over here over Suzlon. Stop loss that he needs to maintain on the lower side over here is going to be of 40 rupees 50 paisa, given that level holds on. I am expecting the stock prices to move on the higher side around 70 to 72 levels on the weeklies over here for the investment time horizon that he has.
All right, this one is coming in from A.V. Ramesh, who's writing to us from Delhi. This one is for you, Rajesh. He wants to purchase 5,000 shares of Madan Sumi wiring at current price, this for a period of about 2 years. Do you think it's a good bet, the Madan Sumi wiring, or do you think that another counter or Samil, for the matter of fact, would be a better bet?
See, it's one of the larger companies wire harnessing business and doing very well. Yesterday, the numbers came in and they were pretty good. Margins have improved, numbers have improved. Target of 84 rupees is quite possible in this in the next 1 year, 18 months. So one can go long on this. And the best part is it is not participated in the kind of rally which we have witnessed in the last 1 year or so. So it's a buy from our side. Somebody holding can continue to hold and even add.
Right. Rajesh, I have this one more query which is for you from Gaurav from Bangalore, and they're talking about, how crude price and that volatility is there right now. They wanted to know, is it a good time to enter Kansai Nerolac for the medium term?
See, Kansai Nerolac is a low volume counter, but in the recent past, the volumes have started increasing. That's from the technical side, but from fundamentally, it's a very good company with very good brands. And we have a target of around 360, 370 odd levels, and we have recommended to our clients also this counter. In the paint industry, there are 2-3 players which are doing very well, but on the valuation part, I think Kansai and Nerolac stands out. One can go long on this.
All right. This next query is coming from Mayang, and this one is for you particularly, Rajesh. Though he's asked about IDFC First Bank, you've already actually answered that query in the previous query that I asked you. Also, he wants to know in particularly, does it have really the potential to give him 20 to 25% CAGR returns in the long term, or should he shift to some high consumer stock, high growth consumer stocks from IDFC First Bank? His buy price is 85.
One can continue to hold for a target of 80, 85 in the next 12 to 18 months, as I said, but CAGR return of 20%, I think won't be possible in the longer term horizon, because I find better opportunities in the banking space, especially in this private sector banking space. The best one would be IDFC Bank or Kotak Bank, which have been languishing quite a lot despite strong fundamentals. In FMCG, you said, right?
Sorry, it was IDFC First Bank. He wanted to know if he should look at some other high growth consumer counter is what he wanted to know. No other stock given in particular order.
Okay. High growth consumer stock, there are a lot of consumer durables. If you want, you can have a look at Polycab or a Havells that are doing very well. In FMCG, if you want to look at consumer point of view, you can have a look at Varun Beverages or ITC. These are some of the counters which I can recommend at this point of time.
Sure, keeping an eye out on all those names. Next query is from Nikhil Sharma from Mumbai. Dhwani, they're holding 8 shares of Century Textile at a price of 2,389 rupees. Should they continue to hold this, or maybe book out profits, or what is the word on this one?
Of course, you've seen some exponential gains coming in on this year, in this particular counter, and definitely, I suggest that one can hold on to it, given follow a trailing stop loss strategy over here. 2000 level holds on to this particular counter. We'll see further momentum again building up in this one. So, in my suggestion, keep holding on to it. Keep a stop loss over here at 2000 levels now.
All right, this one is coming in from viewer Nisha, writing to us from Delhi. She's already purchased some 500 shares of LIC Housing Finance at the levels of about 800 rupees per share. Dhwani, she wants to know whether she should average or hold on to it.
The stock did see some declines over here there in yesterday's session, and in fact in the previous 3 sessions the stock has given a structural breakdown over here. I do see that the stock will face some more beating up over here in the coming days. So in my suggestion, exit is recommended in this particular counter.
Okay, let's move on to the next query, and this one is Dhwani, one more query for you. Short-term query coming in from V Venkatesh. Tata Steel and IOC, they're holding both these stocks. Tata Steel at a price of 165, IOC at the price of 169. What should the short-term target be, and for how long do you suggest they hold the stock?
Tata Steel, in fact, in yesterday's session only has given a breakdown from its previous support, which was around 155 levels, and from that we are trading on the lower side. Even 200 EMA has been broken on the lower side on Tata Steel. So in my suggestion, the stock will do see further beating down coming into this particular few days over here. So I would suggest an exit from Tata Steel right now. You could revisit the one at lower levels and check for it. IOC can be held on to it because despite the overall sell-off coming in this one, we have not seen that it has broken its trading zone that it was forming from on the higher side at 180 to 185 levels, and on the lower side over here around 157. So those ranges over here in this particular counter has not been broken. There's a retest of short-term moving averages happening. So IOC can be hold on to it currently. In my suggestion, the stop loss for this particular counter should be kept at 165. Given that breaks, you will see some cuts coming in over here. But then till that time, it is safe to hold on to this one.
All right, so that's the take coming on this counter. 16 queries done, some more to go. For now, we will take a break. When we come back, we'll continue to take your queries. Don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now, keeping it going with all your stock-related queries. Dhwani, this one is for you. We have automotive stampings and assemblies as the next stock. We have Mathivanan, who's holding 100 shares of this as a price at which is the priced at around 520 rupees. What should they be doing with this? Continue to hold this, or maybe book out profits?
In my suggestion, it is advisable to book in profits over here. On the short term, the stock has made double tops where we are facing supply coming in at 1070 to 1080 levels. I do see that given this holds out, there is more potential for downward into this particular counter. So book your profits at this point in time.
All right, this next query that I have is coming in from our viewer Rudra Gowda, who's writing to us from Hubli. This one is for you, Rajesh. He wants to know about Karnataka Bank, 4,500 shares at a price of 80 rupees per share. He wants an advice on what to do with this particular counter. Very attractive price. Actually, looking at the screen right now, the stock is around 219 rupees per share. So, do you think that he's already made his fair share of profit in this counter, or some more leg or some more room for an upside when it comes to Karnataka Bank based on the fundamentals?
Based on the fundamentals, I could only say that if you have funds, add more. This is a buy from a side, good numbers, trading at a good valuation, I would say. One can go long on this. The recent quarter numbers have been very good. Good on all parameters, I would say, be it deposit advances, NPAs, asset quality, everything. It's a buy from a side.
Rajesh, one more query coming your way. This one is from Krishnan, and he wants to know on Motilal Oswal and PNC Infra. How is it looking to enter both these stocks at the current level for the next 2 years?
PNC infra can be a good bet at this point of time, based on the kind of order book it has, the kind of projects it has, government's focus on infrastructure and all. It's doing very good. One can go long in PNC infra. And as far as Motilal is concerned, I think some bit of correction is due in that. If it corrects by around 5%, then one can go long.
All right, this was coming from Sunny. He wants a technical as well as a fundamental view on Taj GVK. He already has at the levels of around 299 rupees per share. Let me come first to you, Dhwani. What's your take on this one, Taj GVK Hotels? Do you think it makes sense to stay put with this one? Not had a good run at all. 299 is a buy price. What's your take?
I would suggest it's closer to his buy price. I don't see that the stock is going to hold out much over here. Given we'll break about 285 levels over here, there's further downside that can be expected on the short-term charts over here. So in my suggestion, if you're holding a position, exit out of it.
What's your take then, Rajesh? Do you concur with Dhwani? She's talking about technical and the charts that make sense to actually get out of it since it's closer to the buy price. But what's your take? Fundamentally, does it even make sense to stay put with this one?
I fully agree with what Dhani said. As it's very close to his buy price, no point in continuing to hold, because whatever positives were they already discounted in the price. Yes, the tourism industry is doing very well. The hotel industry is also doing well. But one can better be into Indian hotels or a EIH rather than going for Taj GVK at this point of time. So I would say he was just at par to your prices. Why not switch to EIH or Indian hotels?
Okay, sure. The next query we have is coming in from Rajesh Maheshwari from Indore, and it's on Global Spirits, and they're holding 200 shares at an average price of 1,242 rupees. Dhwani, what's the short to medium term outlook for this one? Should they continue to hold the stock?
I'm sorry, I could not catch the stock name from you.
Global Spirits, I think. Yeah.
I'm not able to track this one right now, so I won't be able to comment on it.
Okay, then we'll move on to the next query then. Dhwani, could you give your view on Vraj Iron and Steel? The viewer Tansin is holding it at a price of 240 rupees. So continue to hold or sell?
All right. So when we're talking about Vraj Iron and Steel, it's a recent listing that I'm seeing over here. There's no point in holding on to this particular counter. We are constantly seeing a downtrend coming into this one. So with whatever the short-term data is that available for it, in my suggestion, it's better to exit out of it.
All right, this next one is coming in from Prashant. He's writing to us from Delhi and he wants to know about Khaitan Chemical and Fertilizer. I'm not sure if you tracked this one. Rajesh, have you tracked this one?
Yes, we do track this one occasionally, and I don't find any reason to believe that one should continue building to this or even add or buy if somebody is thinking of buying it. It's better to avoid, and as I said earlier in the show also, that there are better names like RCF or Deepak Fertilizer, Coromandel in these space which one can buy.
Okay, let's move on to the next query, and this one is from Krishna from Bangalore. They're holding IRB at a price of around 31.50 rupees per share. Dhwani, should they continue to hold this or maybe look to sell?
I mean, of course, the stock is doubled from the price that we are holding, 31.5 to 60. It's a good rally over here. In my suggestion, I would suggest to exit out of it, given that recently the stock has shown a resistance around 73 levels from where the supply is coming in. And in fact, yesterday's session, we saw a gap down opening, and there is still a sell-off that can be expected in this one. So you're almost making double over here. It's good to broker profits over here.
Girish Iyer is writing to us from Kerala. This one is for you, Rajesh. He has Exide Industries in his portfolio, about 10,000 shares of Exide at a price of 260 rupees per share. He's saying he's in a loss right now, which I'm not sure if it's the same Exide that we are talking about, because if his buy price is 260, then I believe he's making a profit. So let me get back to this query that our viewer has written. Let me take another one instead. This one is coming from Ashok. He's writing to us from Bangalore. NMDC Steel, his buy price is 55 rupees per share, 300 shares of NMDC Steel. Should he continue to stay put with this, add some more or exit? What's your take coming on NMDC Steel in particular, Rajesh?
You can continue to hold. although the disinvestment has been denied by the government as such at this point of time, but the kind of capacity it has, I think one can continue to hold on the hopes that maybe in the near future something might happen on the corporate side. As far as numbers are concerned, I think better choices are there in the steel space. I would say Jindal Steel and Power would be a better choice when you compare to NMDC.
Has quickly actually changed the buy price for Exide Industries. It is indeed Exide Industries, Rajesh. 560 is his buy price. Therefore, he is in the loss in this particular counter. Should he stay put with Exide Industries or substitute it with another counter altogether? And I believe he bought Exide Industry at the peak of the price when you had good positive news flow supporting the counter. What's your take? Do you think the fundamentals are intact, not to get perturbed with this sort of blip coming in the stock price right now?
We do believe that the fundamentals are intact, the company is doing well, and as I said, that both the battery players are doing very well. Have tie-up with a lot of OEMs, the two-wheeler and four-wheeler space. And with the kind of auto numbers coming in, these two players are going to do well. And as far as Exide is concerned, they are moving into EV space too. And that's a positive point, extra positive point for Exide. I think one can continue to hold. These kind of corrections are just because of the kind of run-up this stock has seen in the recent past. And if you have a long-term view, you can continue to hold.
Sure, okay. This next query, Dhwani, I'm not sure if you have tracked it or you've gotten time to look at this one. It's Netweb Tech, which is a new listing. So that stock is down almost 11%. The viewer wants to know whether it's a good time to start entering Netweb Tech.
No, with limited data, I'm still not tracking into this particular counter, so not able to comment on it.
Sure. Rajesh, have you managed to see Netweb Tech, and is that something you would look to buy in the recent IPOs?
Oh, I don't like this. But I haven't seen this recently.
All right, let me take the next one then. This one is coming from Chandrasekharan, writing to us from Chennai. Thomas Cook is a counter, 2,000 shares at an average price of 220 rupees per share. Should a viewer go ahead and book profits in this one, Dhwani, or should the viewer actually look to stay put for a period of about 6 months or so? He's not making that much of a profit as of now. Yeah, he's repeated the query, so therefore he's forgot to mention about that. But what's your take? Stay put with Thomas Cook for a longer period of time?
No, in my suggestion, exit is better in this particular counter. The stock was making a higher high formation channel, but we have seen a channel breakdown with the fall in the last 2 days that we have witnessed. So it's an exit from my side.
Okay, let's move on to the next query. This one is on, okay, PFC is also already answered. We have this next query coming in on Equity Small Finance Bank. Rajesh Kumar from Messer wants to know your long-term view. They bought this at 37.44 rupees. What should they be doing?
Try to exit, I would say. SFBs are not doing that great, except for one or two names like AU, Small Finance Bank, and others. So it's better to be into a universal banking space, like I said, Kotak and IDFC in a better valuation at this point of time. So if you want to be in banking space, go for a universal bank. IDFC is trading at a very huge discount to its what it should be. So go along on that.
All right, 30 stock queries is how many we've got your answers for over the last actually 45 minutes or so. Some more queries are left to be taken, but this after a short break.